The Dow Jones Industrial Average, DJIA, has recently experienced a historic milestone, briefly reaching 40,000 for the first time, spurred by renewed investor optimism regarding the U.S. economy. This optimism is fueled by encouraging signs. Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. The recent economic landscape in the United States has been marked by a momentous achievement, as the Dow Jones Industrial Average, DJIA, briefly touched the unprecedented milestone of 40,000 points. This surge reflects a wave of optimism among investors, bolstered by a confluence of favorable economic indicators such as slowing inflation, a resilient labor market, and strong corporate earnings. The brief rise of the DJIA to this record level symbolizes a broader hope for a soft landing for the U.S. economy, mitigating fears of severe economic downturns. Despite this achievement, the DJIA slightly retracted to 39,869 by the market close, suggesting that while optimism is high, caution still prevails. The contrasting sentiments from strong stock market performance and public apprehension about economic stability raise a crucial question. Can the current economic strategies truly bridge the gap between investor confidence and everyday consumer sentiment? Renewed hopes for economic stability. On Thursday, the Dow Jones Industrial Average, DJIA, briefly reached a historic 40,000 points for the first time, reflecting a surge of investor confidence following a favorable inflation report. Despite closing at a slightly lower 39,869 points, this milestone highlights a renewed optimism about the U.S. economy's trajectory. This optimism is driven by several key factors, including decelerating inflation, a robust labor market, and strong corporate earnings. Inflation trends and market reactions. The Bureau of Labor Statistics recently reported a 3.4% rise in the Consumer Price Index, CPI, for April, which was below analysts' expectations and indicated a trend towards slowing inflation. This was a relief for investors, as the news on core inflation, excluding volatile food and energy prices, showed better than expected results. Specifically, core goods such as cars experienced outright deflation, housing inflation decelerated, and other services showed month-to-month improvement. Retail sales also decelerated from previous highs, which is often viewed favorably by investors as it suggests a more sustainable rate of price increases. The impact of slowing inflation on interest rates. Decelerating inflation has significant implications for interest rates, which affect the cost of borrowing for credit cards, auto loans, and mortgages. Over the past spring, the stock market faced challenges as inflation reports showed accelerating rates, causing the DJIA to drop by about 5% between March and April. However, the April report, which indicated the first slowdown in inflation for the year, has alleviated some of these concerns. This has reignited investor hopes for a soft landing and a potential interest rate cut in 2024. Federal Reserve's inflation targets and market expectation. The Federal Reserve continues to aim for an inflation rate of 2%. If the Fed perceives a trend toward this target, it may consider reducing its key interest rate, which has remained near 5.5% for about a year. Lower interest rates could benefit businesses and consumers by reducing monthly payments, potentially boosting economic activity. Corporate earnings and stock market performance. Another factor driving stock market optimism is robust corporate earnings. In the first quarter of the year, approximately 3/4 of publicly traded companies exceeded their earnings estimates, surpassing historical averages. Early Thursday, Walmart reported earnings that beat analysts' expectations, joining the ranks of companies experiencing strong financial performance. This trend has propelled the S&P 500 to new all-time highs, reinforcing positive market sentiment. The mixed picture of economic well-being. While a strong stock market suggests positive economic momentum, it does not necessarily reflect the experiences of all Americans. For instance, a recent University of Michigan consumer sentiment survey fell to its lowest level in 6 months. Similarly, the New York Federal Reserve survey showed that consumers expect inflation to worsen in the short term and feel less certain about job prospects, with the perceived probability of finding a new job declining to its lowest since April 2021. Balancing optimism and realities. Despite these mixed signals, many indicators suggest that the U.S. economy remains robust. A healthy consumer sector, strong labor market, potentially lower interest rates benefiting housing, and improving manufacturing all point to an economy that might exceed expectations in the latter part of 2024. This sentiment was echoed by Ryan Dietrich, chief market strategist at Carson Group, who noted that the overall economic data points to a potentially surprising upside for the rest of the year. The brief rise of the DJIA to 40,000 symbolizes a renewed optimism about the U.S. economy's potential for a soft landing amidst ongoing inflation concerns and robust corporate earnings. However, this optimism is tempered by the reality of mixed consumer sentiments and uncertain job prospects. As the economic landscape continues to evolve, it raises an essential question for reflection. Can the current economic policies sustain this optimism and bridge the gap between stock market performance and everyday economic experiences? Share your thoughts on how the economy's trajectory impacts your personal financial outlook. Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.